Did you guys see the chart that I posted into the group chat that showed Bitcoin activity as a function of year and value? Nick, can you just put that up just so that we can look at that together? The crazy thing about this chart, when you look at it, and it's pretty obvious, is that we are collectively in one way, shape, or form basically trading up ever since 2018, really, with all the stimulus. Because if you look at the mean price of Bitcoin, about 2018, it was a nothing burger. What we were talking about was, a price that was sort of between a few $1,000s, $2,000, $3,000,
10,000,
and then 3,000, and then all of a sudden, when all of this stimulus money hit the market, look what happened to it. Yep. But I think something unique also happened, which is that people really understood how to run these very complicated off-chain Bitcoin ARBs. And I think we should explain what those are, because those are what's behind the Three Arrows Capital. It's behind, I think Sam had this kind of oblique tweet that said, some of these exchanges are actually already insolvent. They're already the walking dead. So the first thing to keep in mind is that, this is a completely unregulated market, right? There are no market makers per se that actually have reporting requirements to any regulatory authority. There aren't any clearing houses. There isn't a way for us to understand systemic risk as it builds in the crypto market.
Hello and welcome to Money Talks. In today's video, popular venture capitalist and CEO of Social Capital, Chamath Palihapitiya, shares his updated outlook on the crypto markets by analyzing the Bitcoin charts and by classifying the crypto assets and high-yield crypto lending. He explains that one of the biggest disadvantages for cryptocurrencies is being a completely unregulated market, and this has led to a systemic risk of extreme conditions in the markets. Make sure to stick around till the end of this video, where Chamath reveals why there is a chance of a potential fallout in the crypto space and how Terra Luna collapse triggered a series of crashes in this market. So without wasting any time, let's dive right into the video.
So what happened starting in 2018 and 19 is people realized the following things were true. It's sort of what we talked about last week. You go and do some crazy round. You mark up some phantom equity in a company. That company then issues tokens. You then list the tokens, not on, a blockchain per se, obviously, but in a place where trades can happen off-chain, right? And there's a bunch of exchanges where these things happen off-chain because it's one, company, and then they have a bunch of segregated sub-accounts. And what happens is when these things initially get listed, retail goes crazy, the price goes up, folks basically dump on retail. And you spin that loop as fast as you can, and you can extract an enormous amount of money. Along the way, all these things like DeFi all of a sudden popped out of nowhere. And it's like, hey, you can earn 15, 16, 17, 18%, just deposit the Bitcoin. And so folks would deposit Bitcoin. But then what would happen is like the places where those deposits were held would then need to obviously find places to make that 11, 12, or 13%. And so then they would go off chain to some other random person who was offering to pay them even more than that. And they would try to arb the difference. But it all catches up with you, because when something like a Terra goes to zero, all the Bitcoin that was used to basically, run that DeFi process around Terra vanishes, and then all of a sudden you, the lender, are like, hey, can I have my Bitcoin back? And the broker's like, well, actually, I don't have it. I lent it to somebody else. Let me ask that someone else. And they're like, I'm sorry, I don't have it, but I have these Terra coins, because I was running some ARB and now it went to zero. And that's essentially what we're seeing right now.
Recently, Bitcoin fell below $19,000 as the world's largest digital currency remains under pressure from macroeconomic worries and a liquidity crisis among high-profile crypto companies. Bitcoin was last trading 5.7% lower at $18,978. The digital currency is down around 58% this year alone and has fallen about 72% from its all-time high of $68,990 that was hit in November.
So we have two big problems. And then I think we have a third that's kind of funny. The first big problem is like, obviously in the absence of any regulatory oversight, this stuff is going to happen. Systemic risks are going to build up. That's what we're facing right now, is an enormous amount of systemic risk largely around Bitcoin. A bunch of this money, I think, has been essentially just vaporized. And so all these people that try to find their deposits, especially in custodial accounts in off-chain brokers, may be SOL at some point. And I think that's just going to be a huge shit show if that actually happens.
Additionally, global stock markets remain under pressure, with the S&P 500 falling to end its worst first half of the year since 1970. Bitcoin has been closely correlated to the movement of equity indexes, and in particular the Nasdaq. Stocks have been under pressure, which has weighed on the price of Bitcoin.
Does anybody have recourse to this Three Arrows Capital and all of this other interrelated parties that are now, gone completely bankrupt because of this scam? The answer is absolutely not. So that's the first problem. You have absolutely zero oversight, which means systemic risk has been built up in the system. The second thing is that exactly what you just said, Jason, is that people don't even understand chain of custody here, which is that you thought that you owned this Bitcoin. It turns out you actually may not actually own them at all. You thought that you were properly lending them out. You actually don't. There is no enforceable contract, it turns out. And so I think that's going to be an entire set of different legal issues that are now going to come to the surface because people who actually legitimately lent this stuff out, for example, like if you short a stock and you go and borrow stock from any one of us, there are really tight guardrails. If you wanted to go and put a credit derivative swap on against debt, there's a central clearinghouse that makes sure you're not over levered. You have to go and get audited by a bank to even get the kind of account that allows you to put these derivatives on. None of that was possible in crypto. And then the last thing, which I think is kind of funny, is that we've had to listen to every millennial and Gen Z market observer in crypto tout how this is not like boomers, and they turn out to be the same. I mean, this is the funniest thing of all. It's like, of all of the times you've had to hear how it's so different, it turns out it is entirely the same. Entirely the same. In fact, worse.
Investors are also worried about rampant inflation, which is forcing global central banks to raise interest rates. That is also sparking fears of a recession in the US and other countries.
A Bitcoin has a legitimate non-fungible entry in a blockchain that says it and only it represents that thing. And I think that is I guess the link.
Security interest.
Some may call it tenuous, but I tend to think at this point, Bitcoin probably has to be regulated like a security, even if it is not, and it's more of a commodity, only because of the volume and the sheer size of both the market and the
potential fallout
markets.
Is the way you're saying it, right? The potential fallout when things go off the rails is so great, you kind of need to have some rails.
Yeah, I mean, like again, as I've said, look, if you're a market participant trying to trade, very sophisticated, derivatives of any kind, for example, in the credit markets, we have to go and we create these things called ISDAs. They're called ISDAs, and it's basically a kind of an account that allows us to go and, take risk in some of these very esoteric markets. But the underlying principle around that is a common set of parameters, a clearinghouse, the ability to monitor risk. None of those things exist here. And I think that's really what folks have to solve for now. Secondarily is, what were all these kind of like shadow activities? It seemed too good to be true when you would hear, wow, this DeFi protocol will yield you 24%. And you're just like,
who was paying the 24%?
How is it? It never made sense really, but then none of us really questioned it enough.
The crypto price crash has exposed the highly leveraged nature of the industry and caused a liquidity issue across companies. Cryptocurrency hedge fund Three Arrows Capital fell into liquidation this week, a person with knowledge on the matter told CNBC.
We have to answer a really important question. Look, the markets have incinerated many trillions of dollars. I just saw, for example, there was 1.7 trillion, that was just torched in ETFs alone, just since the beginning of this year, right? We've done that or more in the crypto side. We've done that or more on public equities, right? We're probably going to do that or more in other markets, but every other market is regulated, and there's a full accounting of the P&Ls on the dollars that are won and the dollars that are lost. And here, some folks have just, basically escaped with billions and billions and billions of dollars and the bag holder is just, a retail investor. So the real question is, are regulators going to actually care to try to do something? Because the level of grift that's happened in this market is extreme. And especially when everybody was telling you, no, this time is different. This market is completely different. It's transparent. It's on chain. You can see and it turns out actually most of it was not on chain. It was off chain.
A margin call is a situation in which an investor has to commit more funds to avoid losses on a trade made with borrowed cash. Meanwhile, cryptocurrency exchange CoinFlex paused withdrawals for customers last week, citing extreme market conditions. CoinFlex is issuing a new coin to make up the $47 million shortfall. In this environment, pressure on Bitcoin and other crypto assets remains, given the uncertainty over whether the deleveraging of the industry is over. So, do you think Bitcoin will suffer from another potential fallout? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.